MP Dame Angela Eagle, who sits on the Treasury Select Committee, is with us. Hi, good to see you. You talked about the banks profiteering. Are they profiteering or just profiting?
I think the profits are going to be colossal. If you look at what happened last year, nearly £5 billion extra profits made on the difference between the interest rate that borrowers have to pay, which is currently around about 7% for mortgages, costing those who have to redo their mortgages about £3,000 extra a year, and a measly 2.3% for those that have got savings. So with inflation at around 10, your savings actually reduce in real value over the year, and the banks take the difference. They've been very slow to pass on the interest rate rises to those who were lucky enough to have a little bit of money in the bank, and that particularly affects people who are retired and older and only have their savings to live on.
Yeah, we're looking at worldwide profits for some of the banks. HSBC are miles ahead of the others, but all of them are making huge amounts of money. Do you think they are behaving in an unreasonable and unethical way?
Well, they've got to prove, I think, in their meeting with the Financial Conduct Authority today that they're not doing that. The Financial Conduct Authority are introducing a thing at the end of this month called the Consumer Duty, which is a general duty for all financial services to treat consumers fairly. And the FCA have to judge what fair is. I think these unwarranted, huge extra profits on rising interest rates is a case in point that needs very, very close looking at indeed.
Are you worried about regulatory overreach?
Not at the moment. You have to look to see how the FCA behave, but I think the banks, if you look ahead again at the end of the month, there'll be second quarter profits recorded just as Parliament rises, unfortunately, and I think you'll see some pretty colossal profits being made by the banks then. They've got to explain whether they're treating consumers fairly. At the moment, I don't think they are.
So what do you want to see happen? Do you want it to mirror the mortgage interest rate rises with the savings interest rate rises?
I think there has to be a much smaller gap between the two, and I'd like to see them passing on those benefits much faster than they are doing. We know there are a plethora of different accounts offered, and you usually have to spend your entire working life switching from the one to the other, and it only lasts 6 months or a year, and then you have to do it constantly. They should make it much easier for people to, especially loyal customers, to maximise the money that they get for savings. It's never going to be as big as those that have to borrow pay for obvious reasons, but at the same time the gap is ridiculous and unsustainable at the moment.
Ridiculous and unsustainable. So just to clarify, you would like to see the increase not quite the same, but more, mirroring it more than it does at the moment.
There must be a smaller gap.
Yeah, and at the same time as the
they must do it faster, I think. It's the same with petrol prices. You see it across the economy. At a time when prices are changing rapidly, these hidden extra increases can actually be hidden, and consumers blame other things, not the providers themselves. And what then happens is inflation stays higher. Well, inflation in the UK economy is actually now a laggard in the whole G7. We've got the highest rates of inflation, and it's sticky. It's not coming down. Some of the results of this profiteering in the economy, of which banks are one example, is also affecting the rate at which inflation comes down and making the cost of living crisis worse and making it last longer.
What should happen if they don't? If they decide, you know what, you're whistling in the wind, we're not going to do what you're asking us to do?
Well, governments can do a range of things. I'm not sure this one will. They're having them in for a nice little cosy chat. So that's a good start. But if they refuse to cooperate, then I think the FCA should get much tougher with them. And if that doesn't work, then the Chancellor should have something to say. I'm sure a Labour Chancellor would.
OK. Say what?
Well, there's all sorts you can do with excess profits. And there's all sorts you can...
You're talking about windfall tax?
I am. Yes, I am. If it's proved that there's a problem, if you look at excess profit making throughout the economy in this period, you've got to think about stuff like that. If people don't, if the suppliers don't listen and they carry on thinking we can just make our own profits and there'll be no consequences except our executive pay will be higher.
And is your view mirrored by the Treasury Select Committee, other members?
Well, there's a range of views on the Treasury Select Committee, but I can say, because it's a Conservative majority on that committee, but I can say that all the members of the Treasury Select Committee are very worried about this gap. That's why we wrote the letter to the banks, and that's why we wrote to the Financial Conduct Authority asking them to look at it. And we're very pleased as a committee that they are.
OK, it's good to talk to you. Thanks for taking the time to join us, Dame Angela. Thank you.
Thank you.